Hey guys, Whitney here. Thanks for joining me today. I've got two special guests with us from our acquisitions team, but we're just going to give everybody a minute to file into the room. So, just take your time doing that. As you're kind of getting situated in here, make sure that you found your Q&A box and your chat box. If you've got a question, let us know. Q&A is a little bit easier for me to track, but not everybody knows where the Q&A box is. If not, that's okay. Just drop your question in the chat box for us. We will do our best to answer the questions in line in the presentation. If not, I'll stay online and clean everything up at the end. But let's see here. I think we're good. So let's go ahead and kick it off. So guys, welcome to another episode of the Passive Investing Made Simple show. I'm Whitney Elkins-Hutten. I'm the Director of Investor Education here at PassiveInvesting.com. And I do this weekly webinar series really to help you learn all the different facets about passive investing and really just put this knowledge into action so you can confidently go into your first or next investment. So if this is your first time joining me today, thank you so much for joining me. If you want to join live in the future, go to passiveinvestingwithwhitney.com and register there. There's a few things that you get. You can get access to all the weekly webinar classes, any additional YouTube videos that I put out. I've got some freebies and goodies for downloads for you, like a checklist and an ebook. And you can also hop on the phone with me there directly and discuss your investing goals. But today we are going to dive into this Charlotte market, what makes it a hot area to invest. And I am so excited to bring on our two gurus here, which are Chris Neary and not Chris Neary, but Eric Fitzgerald. For some reason, sorry if you're joining us live, we've got Chris Neary here on twice. But yeah, Eric Fitzgerald and Chris Neary. Eric and Chris, go ahead and you get what I'm laughing at now, Chris, right?
I see it. We're both named Chris Neary. I am the real Chris Neary. That is me. I can go first since I am here twice. So again, I'm Chris Neary. I live in Charleston, South Carolina. I am the Senior Acquisitions Associate here at PassiveInvesting.com. I'm originally from New York. I've been with the company for basically 2 years at this point, a year full time, and I'll hand it over to Eric.
Thanks, Chris. Yeah, my name is Eric Fitzgerald. I'm the Director of Acquisitions here at PassiveInvesting.com. So I head up the acquisitions team, and basically our goals is to find good places for our investors' capital in the multifamily space. From Pennsylvania, I live here in Charlotte, so this is a great market report for us. It's an easy one. Yeah, looking forward to sharing a little bit about Charlotte and our team.
Awesome. Well, so let's actually kick it off. Like for investors that are just, maybe new to passive investing or maybe didn't quite go into their first investment like they should have, what should we be looking for? What should investors be looking for in a market? And then what do we hone in on at passiveinvesting.com?
Yeah, I think it will depend on your goals as an investor. So if you're looking to be a passive investor, it's a little bit easier to invest outside of your backyard. A lot of times people will tell you if you're starting out on your own, maybe buying a small multi or a duplex or something like that, and maybe you should invest a little bit closer to home. But we've scaled to a point where we look at the major markets, mainly in the Southeast. Texas would be included in that. So Carolinas, Florida, Nashville is a new market for us that we're looking in this year, and hopefully we'll have some deals coming out of there in the near future. Texas, like I mentioned, so we're pretty well spread out in the Southeast United States, and there's a few reasons for that. One of them being that's where a lot of the in-migration is coming from other states. So with the deal that we just bought in Fort Myers, a good portion of the tenant base there were New York residents like Chris or Pennsylvania residents like myself. And you can see where both of us ended up in Charlotte and Charleston. So there's a lot of net migration coming in from other states in the US down to the states that we look in. And that's kind of one of the big driving factors in our markets.
Well, what else? What other metrics are kind of driving factors for investing in the Southeast?
So I can build upon that. So with that net migration or in-migration comes population growth, right? So that's a main factor as to what is a great market to invest. If you have a decreasing population, your rents are going to go down. There's going to be less new development in the specific market or submarket. So with population growth, there is rent growth, there's job growth, there is submarket growth. So population growth is a huge one, and that also goes hand in hand with household medium income or medium household income. That is a large KPI that we do track. That does differ from the average, so we typically go with the median household income rather than the average. That's a big one for us. Another thing would be transaction volume. So the size or the number of deals that are transacting in a market just shows how many new deals are coming online, how many investors are interested in that. So yeah, Eric, is there another one that I'm missing there?
Yeah, so what about are there anything else that we look at in particular, why the southeast, do taxes play into it, landlord tenant laws, anything like that?
Yeah. So landlord tenant laws is a big one as far as how much, how many rights a landlord has over their property in terms of when they need to get a tenant out or what their ways of getting paid are. And then, very tax-friendly states, and that also plays into the net migration. That's why a lot of those New Yorkers are moving down, is because of those lower taxes. And Chris touched on the, median household income. That's something that, especially as rents have grown as much as they have in the last year, we actually request demographic reports up front on the properties that we look at, because we want to make sure that the same tenant that paid, $1,500 with maybe 2 months free for the unit when they first moved in can support, the rent upside of where their new lease is going to be at on their renewal. We also want to make sure that the general area has enough residents to pull from if they need to move out and a new resident has to move in. We want to make sure that those people in that submarket can afford the new rents because they've changed so much over the last year.
Got it. So let me sound that back to you. We're not only looking at the general market metrics, but also the micro metrics that are actually happening at the property level.
Yep, that's correct.
Awesome. So let's dive into the Charlotte market. What makes it attractive?
Yeah. Can I share my screen on here? Am I able to do that?
Yes. Yep, you should be able to.
Let me share this right here. All right, can everybody see the map?
Yeah, we can see the map.
All right. So Charlotte, obviously everybody knows I hope everybody knows where Charlotte is on the map. Obviously it's in that kind of southeast area that we look in. Here's where I was, and Chris, you're somewhere up here, I think, or down here.
Yep.
So we were two of the people that moved on down to this area of the country. Charlotte, as far as a destination for northerners moving down, is attractive for a few reasons. There's Asheville up here. That's a 2-hour trip. Maybe I can zoom in a little bit further. But Asheville is out here. That's a good kind of weekend trip for lifestyle purposes. And then the dig on Charlotte, that it doesn't have a beach, but what we do have is Lake Norman up here, which is a large lake. Actually where my parents are at. So there's good boating, good fishing, kind of up in this area. So that's just kind of a high level overview on Charlotte as a location. I can go into this kind of, can you guys see that market report?
We actually have a property on Lake Norman, don't we?
We do, yep.
Yeah.
It is, I forgot to mention that, yeah. So it's definitely a great area up there.
So we've actually been tracking Charlotte since 2018. It's from inception of our company, and we've actually purchased, I think, 4 properties to date in the Charlotte MSA. Charlotte MSA actually includes part of South Carolina, ironically, a place called Fort Mill, which on the map there is in the south, where Eric is circling right there. So we actually have a property there as well. So Charlotte is actually a very large area base and it actually includes another state part of it. So the MSA, the larger market. Yeah, and we can get into some of the metrics. Eric was pulling up that page there.
Here we go. You guys see that okay?
Mm-hmm.
All right. So one of the things obviously we look at is occupancy. That is important for a few different reasons. One of them being, how is the supply versus demand relationship happening? And if you have then a good relationship and occupancy is high, you then have a little bit more pricing power on your rents because demand is so high. So as you can see here, we're up 9% this year. So effective rent is averaging at $1,500, but we're actually affordable compared to a lot of other metros because we're under that 30%. I think the average is 28 or 29%. So we actually, like we were saying, we look at those demographic reports to make sure the tenants can afford those increase in rents. Charlotte as a whole, and obviously this is very sub-market specific, but Charlotte as a whole is an affordable market relative to other markets in the United States. So that's something that we look at pretty heavily. You can see employment trends here. Employment is down to 3.1%. Had that COVID spike like everybody, but it's actually returned to some pretty historical lows there just after 2019. So we still see price per unit and cap rate, like all of the markets, cap rates compressing, price per unit increasing. There's a 4.5 to a 4.6 is expected in Charlotte, so a slight expansion. But keep in mind that takes into account Class A, B, and C assets. So I think for Class A, you'll find the cap rates are a lot lower and probably not going to expand as much as maybe a Class C in case interest rates rise and companies are not able to pay as much for Class C deals. So that's just.
So before you move on, can you go into a little bit more detail of what cap rate expansion actually is and how it impacts?
Yeah. So cap rate is basically it's historically been a measure of risk to your investment. So if you were to pay all cash for a property and you have a 6% cap rate on the property, you'd be getting a 6% return. It's now used as kind of more of a measure of risk. So if I'm buying a property at a 5% cap rate versus a 10% cap rate, I'm basically paying more dollars per return, per percentage of return than I am for the 10% cap rate. So typically I would be buying a Class A property for a 4% cap rate and a Class C for a 6% or a 7% cap rate, because I'm getting a higher return for every dollar I'm investing. And Class C should, although it's not so much the fact now in this market where Class A to C, the cap rates are very similar. Class C, there should be more of a risk-adjusted return where you're getting actually a higher return per dollar you're investing. Did I do a decent job of explaining that?
Yeah, no, I think so. And also, if we see cap rates go down, the property value will go up naturally. And if cap rates float up, you still can get, as long as you're increasing the net operating income on the property, you're still going to earn a return, right? It's just, I always use the example, if you have $100 and you divide it by 4%, you're going to get a 25% return. You divide it by 5, you're going to get a 20% return, right? So it just kind of helps you, an investor, understand you can still make money in both environments. It's just a matter at what scale.
Yep.
Yeah, and you can actually see that on that sales trend graph. So that blue bar going vertical is actually increasing. So that's the average price per unit in the market, and that cap rate is still expanding. So that means the NOI is actually increasing. So the rents are effectively going up to such a high percentage, which I think Eric mentioned, over 9%. And the year prior to that, 2020, was 15% in Charlotte. So
that's awesome.
Exactly.
Yeah, I can. Are we all good on this? Anything else that we wanted to mention on here?
No.
Okay.
I think it's important to highlight the economic engines of Charlotte. Where are these jobs coming from? What sectors? And so Charlotte has a financial district that is pretty large. It's one of the main suppliers of jobs in Charlotte. We have a large medical supply, and then technology and energy. So those are the four main sectors pulling the jobs, both increasing in jobs. There's a lot of companies actually coming into Charlotte. I think I read a number of 30,000 jobs per year is expected for 2022 and 2023.
That's huge.
It's very large numbers for a MSA that is of 1.2 million residents.
Awesome.
Sweet. Well, I think maybe we can go in a little bit more micro on Charlotte, talk a little bit about the submarkets and what we like to look at there. And then we have a couple of articles here on kind of the new development story of Charlotte and where things are heading, if that
Yeah,
sounds
let's
good.
dive into the submarkets. That'd be fantastic.
All right. So inside of this 277, they call it the loop, 277 loop. All of this in here is going to be pretty much uptown. So I actually live right here. And this whole corridor on East Stonewall, this is where the football stadium is. There's a new JW Marriott hotel, a Whole Foods. So this whole area right here is expanding pretty rapidly on this second ward, they call it. So this right here is expanding out this way, and you can see this street called South Boulevard coming out of here outside of 277 down into here. So this is where all the growth is happening right now in Charlotte. I don't want to say all the growth, but all of the kind of explosive news coverage type of growth. This whole area is called South End. So we have a couple of articles that we can go a little bit more deep into South End, but just wanted to kind of point out that South End is an area where a lot of office jobs are coming in, affluent kind of income area. So that's the story of Charlotte. Anytime you go visit Charlotte and you're visiting someone local, they're probably going to take you to South End to try to show off their city a little bit. So that's the show off part of Charlotte there. Going out the opposite way, there's a Lynx line. Basically, I can actually see it outside my apartment right now. It's electric train line, public transportation that goes this way across Charlotte. So you can go to South End this way, or you can go up to NODA this way. And this is kind of like an arts district. And we've looked at a couple deals here, really strong incomes in this area. And this actually goes all the way up to University City, where UNC Charlotte is located. So that's wherever this Lynx line is, you're probably going to be in a good spot of Charlotte on this kind of plane here. Going into Dilworth, this is right beside South End. The homes can get up to $2 million, and this kind of stretch here, this kind of grows into the Freedom Park area. These areas right here up in kind of North Charlotte are your more, I wouldn't say low income, but they're starting to be developed. This Enderley Park area, Thomasboro, they haven't historically been known as great locations, but there is development kind of stretching up this north side of Uptown, outside of the 277 loop out in this area, kind of stretching down to this location over here. So, we will look at deals in this area. It's not quite there yet in terms of location, but it is a place that we would be willing to check out. And that actually stretches up north here into the area that we were talking about, where our deal is in Mooresville. Homes on Lake Norman can go up to $6-7 million. Awesome area. I actually lived in Cornelius when I first moved down here. So they actually built an express lane on 77 here going up to the lake. So you can get from, Mooresville or Cornelius down into the city in 20 minutes, which is awesome for people commuting from this area. A lot of single family home developments, good jobs, that kind of stuff up north here. So we kind of talked about NODA. This is the University City, so UNC Charlotte would be up here. We haven't historically looked at a ton of deals up in this area. We have looked at deals down in NODA in this location, kind of a younger demographic there. And then down in the Matthews is a good kind of suburb of Charlotte, good schools, You probably work in Charlotte and then your kids go to school down here, live down here with your kids type of area. And this kind of stretches down into, like Chris was mentioning, Fort Mill. This is the barrier of North and South Carolina, so this is a good location. Again, a lot of commuters that live with kids down here will commute to work in Charlotte, and Rock Hill down here as well.
So I would love to kind of piggyback off this conversation. Like, what specifically is our kind of like metrics that we're looking for?
In each of these submarkets?
Or just like in general, across the submarkets, like.
Yeah, I would say definitely median incomes would be a big one. We like to see residents making over 3 times whatever pro forma monthly rent we have. So that's an important metric, and you're going to be able to hit those in a lot of the submarkets I just talked about. I'd say job growth would be another one, population growth, and you can get pretty granular with services like CoStar or Yardi, as far as like specific submarket population growth, job growth, those kind of metrics. I'd say new supply would be a big one. So University City, up in this area here, is seeing a lot of supply. So it's not necessarily a bad thing. It means that developers, see this area as a growing area, but that is something that we look at on a specific kind of submarket by submarket basis. Is there anything I missed on that, Chris?
Actually, just to piggyback off that, there's actually a chart on that report that you showed earlier of the absorption or deliveries of that. So you can see basically since COVID, that darker blue on the bottom right-hand map right there shows how many units have been filled or rented out. And the Carolina blue is how many new units have come online. So you can see that the demand is higher than the supply for the past 2 years during COVID, and it looks like they're going to finally catch up in 2022, where that Carolina blue bar is going to be larger than that darker blue. So that's a good sign. That might slow the market slightly with the rent growth. That's why we might see some of the cap rates expand slightly, but you can see why there was a 15% increase in year-over-year rent growth because of that demand that was needed or met. Yeah. So just also to build upon that, another fact that I saw earlier was there was $5 billion worth of transaction volume just in Charlotte in 2021, which was almost a third larger than 2020 itself. So there's a lot of transactional trade going on, as well as new properties coming online. So yeah.
That's amazing. And so no wonder why we're looking in the area to try to capitalize on that.
Yeah, it's a great location. So do I could go into kind of specific.
Yeah, let's do it.
Okay. So this is South End that I was talking about. This might be a little small. Can you guys see that okay?
Yeah. Okay. I like the pink.
Yeah, me too. So this is South End that I was talking about here. This building up here, I believe, is a Lowe's headquarters. So one of the newer developments. And then I think this is the Line, which is an office retail mixed use building. So those are two of the newer kind of new developments coming in, but you see this is the next 5 years where the developments are coming. So all of these buildings in pink here are kind of proven out new developments that are breaking ground or getting started with construction coming out of the kind of south end of Charlotte. So you can imagine if you own a home somewhere under these trees, you're very happy. But this is kind of a good visual of how much is happening in this one specific submarket of Charlotte. And there's also a picture of kind of the north side, a similar thing happening, not to this scale, but you can start to see kind of how much is coming in. The majority of these are office buildings, which we can kind of get into, some apartment buildings, but the growth from up here today versus in the next 5 years is pretty substantial. And kind of a cool visual to see.
That's awesome.
So these are specifically, and I don't want to get kind of too into the weeds, but I think it's important to see what developments are driving Charlotte. and these are a few of them. So this is the line that I was talking about. Office up top with a brewery that's pretty well known in Charlotte called Sycamore down below. And this is right on that links line I was talking about. So kind of, you can see it leads into Uptown here. If you keep going past Uptown, you get to the University City area. And this is the kind of south end of the links line. So yeah, brewery on the bottom, 285,000 square feet of office space, and then 20,000 of retail on the bottom. This one is actually already built. This is the Lowe's headquarters right in South End. So you already kind of see the impact of this when you're driving in South End. On some of these apartment rental prices here, these are insanely priced. I think it's just location with all the jobs that are coming in. Vantage South End is a pair of 11-story office towers. These are going to be basically right here, like right around here. So it's actually really close to Uptown, which is good. You can live in Uptown and walk to work, or live in South End and walk to work right around this area. So pretty, and it's always good because it's closer to Uptown. So Uptown kind of has that development going on there as well. So 635,000 square foot campus. Lending Tree is actually already moved in. And the second tower should deliver here pretty shortly. The Square is another one it's an office mixed use with apartments and retail with a park. 110 East is going to be interesting. It's a 23-story office tower, and that's at one of the Lynx Line stations called East West Station. And it's currently a parking lot, so that'll be cool to kind of see that one rise out of the ground. So again, retail on the bottom and office up here on the top. 1714 South, White Point Partners does a lot of work in Charlotte. They're building a 24-story apartment building in South End. And there's one more I want to make sure we just talked about. There's another 30-story going in on an old chicken joint called Prices. So that was a sad goodbye for a lot of people. But this is the big one I wanted to make sure we talked about. So they're planning 3 towers, 1.2 million rentable square feet. So they're going to do a residential tower, 800,000 square feet of office, and a boutique hotel. So this kind of talks a little bit about the location, but this is going to be it right here. It's an old restaurant, but it's kind of right outside of this 277, and it's been kind of hard to tie Uptown and South End together. So this big development here should help do that. So, that's certainly something that we look at is the office development, and you can see there's a ton of office development coming in, with high-paying jobs. So that's something that we look at in every market that we look at, and so it's good to see Charlotte is one of those markets that kind of has that story for it.
Amazing. So I know one question that investors always tend to have is like mitigating any sort of weather risk. And we talked a little bit about mitigating the tenant risk, but like, can we touch on the weather? Like, is there any weather hazards here that we need to be aware of?
I don't think so. I've only been here for 2 or 3 years, but I haven't, no tornadoes or hurricanes or anything bad like that. That's a good point, though. That is something that we look at in some of the coastal markets in Florida with some of the bad weather, but I don't think anything here. Could be wrong.
So I think the good thing about Charlotte is actually the insurance per door on a per door basis is actually less compared to like a Charleston market. Charleston typically tends to get hurricanes, whereas Charlotte does not. It's usually Wilmington, the coast, that's taking that impact. No flooding problems that usually we encounter on any properties that we even look at or buy. So the weather aspect, there's really nothing. It doesn't really snow. Maybe, I don't know, Eric, and you could speak on that. It's really, maybe one snowstorm a year. So weather is actually pretty mitigated in this area.
That's awesome.
Risk-wise. Yeah.
Well, anything else that you guys want investors to know about or take home from our recap of Charlotte?
No, I would say if they're looking in markets for themselves, that office development would be a good thing to look at, and where the jobs are going in each kind of submarket. Yeah, anything from you, Chris?
I think markets like these, basically, especially in the Sun Belt, including Charlotte, are very difficult to get into just because there's so much interest and there's so much competition. So I wouldn't be discouraged if you are looking at properties and it's getting bid up or anything like that, or there's high prices. That's there because there's a reason for all the reasons that we just discussed. So definitely continue to look at deals and try to do your best. But Charlotte's definitely a market that I would encourage you to put on your map.
Excellent, excellent. And that goes back to one of our strengths here at passiveinvesting.com, is that we're able to be competitive in the market because of our relationships that we have in the area. So amazing. Well, thank you so much, guys. This has been amazing. If you guys have, for those of you joining live, if you've got a question, jump into the Q&A box. Ask it there, drop it in the chat box. We've got both Eric and Chris here. We'd love to tap their brains if you've got a question specifically about this market or markets in general. If not, if you have to, leave us today, thank you so much for spending your time with us today and investing in yourself.